And so the upward revision was created by some of these behavioral impacts and responses to the tax law, for which we don't know if, to the extent that this is just timing, that might not be permanent. So in the forecast, we're taking some of this out as we go forward. If people pay a lot today, they may owe less tomorrow. And when we follow things like refunds applied forward, where people say, oh, don't send me my refund check, just go ahead and apply it to my next tax bill, there's a lot of that activity going on as well. So we expect some of this surge to be temporary, but nonetheless, some of it does indicate a bigger economy and a stronger fundamental revenue picture. But also, in addition to that, we're getting a lot of revenue support from the direct impact of tax law changes, particularly associated with the federal tax legislation. Each and every biennium, we're getting hundreds of millions of dollars, including the current biennium at $241 million of just this direct impact of federal tax law. So that's helping push these increases in revenues, and as a result, we've revised significantly upward our forecast for the current round. There are all sorts of provisions in the Federal Tax Act, and that do feed through. I think the two big ones that are left that move the needle for personal income taxes are the business accounting is supposed to be important, although uncertain, and capital expensing, this accelerated depreciation, the Section 179 expensing concept, where you can take your depreciation up front. That feeds through to our flow-through entities. And the third big one is the indirect effect of we pay less federal taxes, and so now we owe more Oregon tax because we can take a smaller deduction for federal taxes because of the deductibility of federal taxes. So I think those are the three biggest components of the effect of the Tax Act on us. On the corporate side, it's the same story. In particular, this bonus depreciation, the numbers are very, very large for that. But they're also uncertain. Is the repatriation revenues are coming from international companies that are bringing their earnings back on shore. And they're being forced to by the federal government, and as a result, we are getting some indirect impact from this. The reason I mention it is because the budget implications of this aren't as extreme as the revenue side of this. For our purposes, we have to count all of this corporate money as general fund money for the statutes that govern us, the kicker law and the balanced budget statute and the like. So we have to count all of this as it comes in. But policymakers are a little more skeptical because of the uncertainty of this number, and so they've taken 145 out of the $245 million and are dedicating that and transferring it to other funds to deal with some of our unfunded liability that was going to happen in the next budget period. So some of these numbers you're going to be really huge for corporate income taxes. In fact, we've triggered a large corporate kicker right now on the order of $197 million right now as a result, largely of this, of the tax law changes. But that said, that doesn't mean there's going to be $245 million of available resources, because some of it's been dedicated already by the legislature. Capital gains, always a risk with the stock market volatility and the like. But in terms of where we are on the personal side, we're also now in the realm of a kicker, in part due to increases in the changes in the tax law, and in part due to other forecast changes, both indirect influences of the tax law and improved economic outlook going forward.